Good day everyone, this is your European Open briefing for October the 21st, 2016. I'm Rafi Bajan, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So the main news this morning is in fact yesterday's ECB policy meeting, where Mario Draghi said that the Governing Council had not discussed tapering the asset purchase program. This pushed the dollar to a 7.5 months low as it raised expectations that the ECB will maintain its ultra loose policy for a while longer. Draghi did not give much away though about what to expect in December when the Governing Council will discuss the review of its asset purchase program by ECB staff. There's also going to be updated projections. So we are likely to get possibly some changes in December, but Draghi gave little away, though the euro was nevertheless weighed by the prospect of the QE program quite possibly being extended beyond March 2017. This helped the dollar, and we saw the dollar index today reaching a fresh 7.5 months high. We also had fairly strong data out of the US yesterday, though the strong dollar is currently weighing on commodities, in particular oil prices. So if we look at what happened with the euro yesterday, we can see a spike up. That spike came after Draghi initially said that in October's meeting, the ECB had not discussed extending the QE program, although it is widely expected that the ECB will do this. It's just that the ECB is waiting for December when they're going to have more information available before making a decision. And then we see the euros quickly coming back down. It dropped below the 1.09 handle. It's currently around lows it last touched back in early March. The ECB President Mario Draghi did clearly say that the tapering is not on the table at the moment, dismissing recent rumors that the ECB was preparing to withdraw its asset purchase program. And so basically the focus will be now on this December meeting, where they might announce possibly some changes to the type of assets they purchase, or possibly how to deal with scarcity of the bonds, particularly German bonds, which there are rumors that they are running out of German bonds to buy. So we'll see what's going to happen in December. If we look at the dollar, we can see that the dollar went above the 104 yen level late yesterday and early today in Asian trading. It's since come down on, it's eased back to around 103.80 yen. There was nothing in particular for that move downwards. We had some fairly decent jobless claims out yesterday, the weekly jobless claims. Although they missed expectations, they were still at healthy levels. We also had some strong rise in existing home sales, and also the Philly Fed manufacturing index came in above expectations. So really the main big focus for the US dollar, it will likely be next week's third quarter GDP data, and that could potentially pave the way for a December rate hike if it comes in fairly strong. Now let's look at what's happening with sterling. You can see sterling is fairly steady. It's holding above the 1.22 handle. This comes despite the fact that yesterday we had disappointing retail sales numbers. UK retail sales were unchanged in September compared to August, and they were up 4.1% year on year instead of the 4.8% expected. Although the 3 months rate for the quarter ending in September, it was the strongest since the end of 2014. So the 1 month figure is not expected to make much impact on the outlook in itself. We also have an EU summit happening. This is the first summit for the new British Prime Minister Theresa May, and also the first summit where, since the UK voted to leave the EU, there wasn't much news coming out. British Prime Minister Theresa May said that she wants to maintain close relationships with Euro even after leaving the European Union. Although the French President did warn the British Prime Minister that if the UK insists on hard Brexit, then she should expect to get a hard stance from the EU as well. The other main movers today are commodities. We can see that oil is rather surprisingly has been sliding since for the past day or so. This comes despite the fact that the oil market is showing signs of tightening as global inventories are in steady decline. But the main reason for this downtrend is the stronger dollar. It's also impacting the gold, which had dropped back to around $1,260 an ounce. It's since firmed a little bit to 1,264. The commodities slide is also weighing on commodity currencies such as the Canadian, Australian, and New Zealand dollars. Now let's look at today's economic calendar. We had some house prices out of China earlier today. They were up sharply 11.2% year on year in September. Although this didn't have much positive impact on the yuan, the Chinese currency fell to a fresh 6-year low today after the People's Bank of China set a weaker midpoint. The other main data today in the European session is the public finances in the UK. We've got some inflation and retail sales figures out of Canada, so that will be watched. We also have the flash consumer confidence index for the Eurozone, but in terms of data for the US, it's looking fairly quiet. So the focus will now move on to next week's data. That's it from me. Thank you very much for watching and have a great day.